Always helps if you have your microphone on at the start of the session. Good morning, everyone, and welcome to today's Forex session. And thank you for taking the time out to come and join us. And I do apologise, we are a little bit later than we anticipated for all sorts of irrelevant technical reasons. But before we start, can I just draw your attention to the disclaimer that I know you can see on your screen? As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. We've pulled this session earlier. We're literally just a few minutes away from the London session. We kind of, we moved away from it. We went later. We've just decided to come back to this time, to this particular time. I know because that helps some of our users and traders down in Australia. It's still, it's late at night, but it's not quite so late as if we were, coming on board. So 2 to 3 hours hence. Right, there's actually quite a lot going on this morning in terms of news, but sadly the currencies themselves, they're kind of a bit well, they're a bit sort of moribund at the moment, and I'll explain why when we have a look at the charts. Before we move to the charts, I have a quick whiz round to see what the news has been. There's been an awful lot of news, obviously, for the UK, as we can see here. Let's have a look. A bit of a mixed picture. A couple of a decent. Beyond expectation, but most of them have been a slight miss. But I don't believe that's really had a huge effect on the British pound so far. We'll go and see that later. Really, the whole focus of the market at the moment is obviously inflation. Those of you who've been coming along to these sessions regularly will know we've been banging on about inflation since, I don't know, the middle of the year, David, haven't we? June, July. I mean, I don't suggest you go and listen to all of our pre-recordings, but this idea that inflation was transitory and it didn't really matter according to the central banks, that it was all the wrong type of inflation. Well, those arguments are going to run and run. But it's certainly very much something that is now exercising the great and the good. That's other metrics that they use to establish whether you have inflation. It's not just obviously the cost of the goods that they use to measure, but it's also employment. The employment numbers are actually quite good. In the sense that there are jobs available. Doesn't mean people are necessarily filling them, and they may not be, and the jobs that are available, there aren't enough people trained for them. That's another issue. But all the things point in, all the classical metrics that you use to establish whether there is inflation and whether the central banks should do something are there. The issue is, we've never had a situation where these metrics, you're having to judge them against what has happened, has happened, and what is still happening with regard to the virus. It hasn't gone; it's there. No one really knows what's going to happen in the coming months. Are there going to be more variants? There are going to be questions for years to come as how it should have been handled. But sometimes I wonder if, as I said, the great and the good actually consider whether taking metrics, classical metrics that have been designed and worked for a normal environment, a normal business cycle, a normal economic cycle. I mean, really, perhaps we should be looking at other things. However, be that as it may, there are always trading opportunities. We are going to see what the charts are telling us. And I'm just having a quick look at trading economics. Those of you who come along know that I have at least 3 economic calendars, so make sure what's going on. Obviously, that's all the UK ones. This is it. This is really, again, core inflation and the inflation rate, etc. And there are other issues as well. There's the debt ceiling. What's, as I said, the virus, there's political risk. there is, I'm trying to think of our laundry list, and obviously what is going on in the bond market. Now, the bond market is actually quite interesting because we've mentioned before, and I've certainly mentioned in my on my Facebook page and in the VPA group that we have for our forex students, and that is this rate. This is the 10-year, the yield on the 10-year. That is the one that certainly is, for a short-term basis, that's what everybody focuses on. You look at the 5-year as well, but the 10-year is like the benchmark. And I think I wrote that it was first it was 1.5, then it was 1.55, and I think it actually spiked higher, and now the key one is whether that goes to 2. But what's interesting about, as I said, about bonds is that the longer at the long end of the curve, as they say, the 30-year, rates are actually coming down slightly. What that tells you, who knows? We'll have to wait and see. But everything, as I said, everything's distorted by two things. First of all, obviously the pandemic, but certainly secondly by what central banks have been up to for the last umpty years, flooding the market with cheap money, basically. So yes, does that mean the metrics that are produced we don't pay attention to? No, we do pay attention to them because that's what other traders are doing and the market is doing. But just be aware that we are kind of in a kind of Alice in Wonderland world at the moment, and who knows what's going to happen when we come out the other end. There is going to be a major correction in the indices. We can see what's happening today. The Dow's down slightly. Where are we? Quick look, flick through. The Russell 2000, I've added this index for the simple reason that this is a very, very speculative index. It's really in a massive range, and we'll have a look at more detail on this index later on when we look at the stocks when we come back this afternoon. It's a huge, it's been in a huge, is it a distribution phase? Who knows? But within the range, it is quite volatile, but this volatility tells you a lot about sentiment. You can see here how volatile it is. It goes down, then it comes back up, it goes up, then it goes down. For intraday trading, it's fantastic. This is yesterday. There's big down day. Suddenly, all the buyers come in, and the reason this the Russell 2000 is a good barometer for risk. I know we talk about the VIX and the S&P. It's because it's a very, very speculative index in the sense that it's where the investors look for the next big thing, the next Apple, the next Facebook, the next Google. And what is the Nasdaq doing? Let's see quickly. That's down slightly, but we are coming into earnings season, so we have to be aware there's all sorts of factors going on in the broader markets. I'm just going to take that down quickly and move on to the charts. Last week, if you came along, we looked at a sort of counter trend trading and using support and resistance levels, whether they can give us offer a trading opportunity. And the pair we looked at was actually the Euro Canadian, and I'm going to look at the Euro Canadian again, and also the Euro Aussie. And I want to say a couple of things about the indicators that we use very, very quickly. David and I developed these indicators specifically for the forex market. That's the CSI, the matrix, the array, and the heat map, which I don't have on my system, on this particular system. I've got on another screen, but next to me. And essentially, what we want to see is what the CSI does. It tells us where the flow of money is going to, where is it going, where's it been, where is it going at the moment, and from that, by using multiple time frames, where we think it's going to go, moving forward. I've lost my connection, David. Have you lost your connection? No. Oh, on my system. No. Yeah, it's back. Sorry about that. It's back again. Right. We always use the hourly one. The hourly one is a nice time frame because it's not too far out, it's not too close to the market, and it gives us a chance to see what's been going on in the previous session. And what I don't want to see, I don't want to see two things. I don't want to see all the lines really in the center of the indicator, because whilst there have been moves, as we can see here in the Aussie going down, and now some, obviously some buying has been coming in, they're all very much bunched, and that tells us that the market is a bit subdued. What I also don't want to see are the values on the hourly chart as low as they are, certainly not down in these single figures here. This indicator takes this data and tells us which are the strongest and the weakest pairs in this time frame. Now, as with all indicators, they are lagging. We get them as close as possible to the market, but there's always a lag. All indicators lag. The key to using indicators, and there is an argument saying, well, why bother with them? They're useless. The key to using indicators, and whether proprietary or standardized, is you use them in multiple time frames. So you say, well, this is what is the hourly telling me. I can see that the Aussie is kicking up. I click on the Aussie and I say, which of the Aussie pairs has that buying, been reflected in most strongly? And don't forget, this is the hourly one. And I can see, well, the Aussie yen is ticking higher, which is actually quite good for sentiment. And we can see the yen is falling. So if you go down to the 15-minute, you can see that, yes, there has been a sort of nice rise in the Aussie. It's not been, a V shape. It's been, trickling up and pulling back and going up. But generally speaking, on this hourly chart, it is reflected on the faster charts, because any change in trend is always going to, it's like a ripple effect. It's going to start in the faster time frames, and then gradually go up to the slower one. So this is how you look at it. Now, if you see, for example, the yen here is falling strongly, as we can see, you can think, okay, well, generally the yen is on a sell, not reflecting the sentiment that we see in the indices, but on the faster time frames, there may be an opportunity for a counter trend to that sentiment, and that counter trend, it could just be a counter trend trade. It could just be, if you're a very short-term trader, if a scalper, yeah, I'll take it. But it could also be the start of a general reversal, which will start in the faster timeframes. You'll never know. I mean, what will tell you, what will help to establish that, is what you see on the chart, is what you see in terms of the candle patterns, what VPA will be telling you in terms of the volume going in. Is there a lot of volume being driven in, and is that going to be sufficient to actually move that the trend, that move that you can see in the slower time frames? And in fact, on the hourly chart, this is actually what we want to see for sentiment. And sometimes the forex market actually leads the way. If you have our indicators, and you are either a student, or you use the approach that we suggest in that that's in the books that are on the books up on Amazon, in a sense that you look at the 3D. You look at these markets in 3D. You look at the technical picture. You look at the fundamentals, and you look at the related markets. You will have noticed, and it's been glaringly obvious, that there has been a lot of divergence. That you've had days when the yen has been sold very, very heavily, but the extent of that selling has not translated into a really strong up day in the indices. In fact, the indices may have been going in the opposite direction. They've kind of caught up later on in the afternoon, because structurally they are actually still quite weak. And this weakness, every time they attempt to rally, something then hits them, and now they're going to be hit more with, as I said, inflation data and the and earnings. There is at the moment this divergence, and our safe haven currencies, which are the Swiss franc, the yen, and the dollar, when the market is working as it should, how we would expect it, you would expect them to move in tandem. So if market is willing to take on more risk, then the Swiss franc, the yen, and the dollar generally will sell off. When it's when it doesn't want to take any risk, they will be buying in these safe haven currencies, and the yen acts as both as a safe haven and also as a currency of risk. So a lot of mixed pictures, but don't be to say, well, that's the methodology, the approach doesn't, it's flawed, as it were. Well, it's only a very broad look at how these markets work. And put it this way, they work more than they don't. But sometimes in the kind of situation we are at the moment, when we've got so many things that the market is concerned with, you will get this divergence. Having an indicator such as the CSI will highlight for you, and if you see a mixed picture, fine, you tell your brain, yeah, it's a mixed picture, and then focus on either the pairs that you like to trade, or where is the best trading opportunity. Now, this is actually quite encouraging. We've got the pound yen going higher. The volatility from the London Open seems to be dying down. Then we look at the support and resistance levels. You can see moves, you can see flows in these as represented by the indicators and on these pairs. But then the other element of, because those of you who come along regularly will know, there are 5 elements to volume price analysis. One is obviously price action, volume candles, candle patterns, and support and resistance. Because when you see you can see the flows, you can see on the hourly chart, we've had a bit of buying of the pound. It looks like it's a bit of a sell-off. Have a look at the faster time frame. As I said, we've had this news. The news is now over. It looks like maybe there's an opportunity to to buy the pound. And you think, right, well, where are the pound pairs? Well, we know pound yen is at the is doing well on the hourly chart. Maybe we can follow. There's an opportunity to go in and look at the pound yen. We've had this bunching in the middle. Now they look as though they're going to be pulling apart, which is what we want. And in fact, if they do pull apart and we can get some momentum behind it, the good news about when a currencies bunch in the middle and you start getting strong divergence, especially when the lines are very, you get these very angular lines, you know that, do you know what? There's probably a good chance there could be a nice move there. If it's reflected over here in the matrix, but the key then is support and resistance. And it's interesting on the dollar here. The dollar's been quite strong. It's broadly still in this kind of congestion phase, although with a sort of bullish tone to it, as it were. But every time these key levels, it hits a key level and it pauses. And the levels we use both price-based and volume-based levels. The volume-based ones come from the volume point of control. The volume point of control is that area on the chart when there is price agreement. There is no firm direction, but once you start getting the breakaway, either to the upside or the downside, and then we have price-based resistance, support and resistance from the actual indicators that we've developed. This is the SM, the dynamic one on MT45, and you have a little hatch line or a solid line. And we have these Camarilla levels, which are so important. The 3rd and the 4th are absolutely key. It's where you'll find they're like targets, like a magnet. Price will get there, it will pause, possibly reverse. If it congests, that is when you wait. If you've missed the move to one of these levels, the way to approach it is you just wait. You wait to see, is it actually going to reverse, or is it just going to as I said, congest, and then it will provide the platform for the move higher. And the way this indicator works is the levels that are given are on the charts from the hour chart to the daily. These are the levels for the rest of the week. So it's something to you have a level, as I said, for the whole week. daily levels are calculated on a daily basis. Now, just go back to the Euro CAD, and then I'll pass over to David and see. Are you looking at the pound at the moment, by the way?
I've got all sorts.
Oh, he's got all sorts, a bit like licorice, all sorts there. Right. Last week was an interesting, this is what you call a very dramatic trend lower. This is the Euro Canadian, where really it's been the break from, let's just shrink this down a bit so you can get an idea of now, let's go back a little bit and look at congestion. Now, this is in the recent past. Congestion phases can be, as they are here, quite narrow, and certainly on a daily, trading that on a daily basis where you have, you do have some nice wide-ranging candles, fine, but where you have a congestion phase with lots and lots of small range candles can be very, very tricky. And I've said before, the daily chart kind of tells you what to expect on the faster time frame. So if you're if the pair is in this phase, and this is quite a tight range here, taking a trade on the faster time frames, you're not going to be in it very long. I mean, that day would have been a good day. This day, that one, not so much, and certainly not these little ones here, as you, because there's very little fat in there for you, as it were. Then it moved, as I said, then we had this break higher. The range, if you like, it's still in a range, but you see it's much wider now, much wider. It's much more, it swings between, as I said, the volume point of control. This is dynamic. I know it would have been here at this point. Now it moves. So when you get these areas build, the volume point of control actually moves accordingly. It doesn't move, obviously it's not going to move very often on something like the daily chart, but it gives you a point of reference so that, if there is a break, this, as I said, this is the daily chart, the chances are it will always come back and retest it. Now, what the VPOC also does, it then delivers these volume-based levels of support and resistance, and these are these bands that you see here. Now the outer bands, the last band, are also important levels, because this is broken, this level here, and in fact it stopped, as when I said earlier about the S3 pausing. So maybe for Euro Canadian, finally, after this massive break lower, it has actually found the support that it's been looking for a potential reversal. We had a little bit of we had an opportunity last Wednesday mid-morning when it really did look like it was going to, was it going to be the day when it was going to come off this trend lower. This is the prime. This is now from the break from the VPOC. This is now a primary trend. And every time you get a rally, it becomes a secondary trend. Does that secondary trend, carry on higher, and we do get a reversal, or does the primary trend kick lower? And last week was a great example where, in the morning, there was a viable counter trend trade on the faster time frames, but it's absolutely been relentless. It's had Tuesday, Monday, we had this little kind of doji candle with a reasonable amount of volume underneath it. It stopped on the I think it's the S2 there, not the S3. It wasn't, and it was also, as David's reminded, it was also a holiday on Monday. So holiday days, price action and volume, you do have to look at it in the context of what happened on the day. Then it carried on lower. It's a lot of volume gone into this candle here, but it has stopped on, as I said, the all important S3. So that's the Euro Canadian. You can see what's happening here. Let's have a look at the hour. Let's have a look. The lines are kind of, we've not got enough divergence at the moment. And the reason we don't have divergence anymore is because support and resistance has kicked in. The levels on the faster time frames, they are calculated on a daily basis. And that lack of divergence is reflected, that we see on the hour. As I said, the lack of divergence on the hour tells us it's kind of in a congestion. It's reflected on the faster time frames. This is going nowhere at the moment. It's actually reversed. It can't get through key R3. It's probably going to have another run at the R3, but if it gets through, then that will provide a really nice platform of support. Let's have a look at and the reason for the Renko is it takes away all the smooths out all the choppiness that you get on a congestion phase that we have here. There's a lot of volume going into the pair at the moment, but it's not enough to push it in one direction or another. And just have a quick look on the hourly chart as well. We're not actually at the volume point of control, we're just below it. If it is going to reverse, you then look at the levels. If it manages to hold it's come off the S3 on the hour, it needs to go back to the S3 on the Renko, on the faster time frames. Let's have a quick look here. Right, there we are. If it touches that again and gets through, then where to look, where is it aiming for after that? Well, again, you look at levels, you've got that, and potentially back to the volume point of control on the hourly chart. Now, just a quick mention on the volume point of control. With these indicators, you have complete flexibility on how you, on the look back period, etc., etc. I actually set my VPOC at 80 for all my time frames. I don't differentiate. I think the indicator is issued when you download it from our website. I will have to go and double check, but I have a feeling that it may be set at slightly more than 80. So if you do have the VPOC, just check. You may like to try it at 80, certainly on the faster time frames, and perhaps keep it at the default setting for the slower ones. But as I said, it's I think if it's either 80 or 150, but mine are all set at the, somebody asked me, they're all set at the same value at 80. Obviously, if you have a longer look back period, then it's going to be then the position is going to change slightly on the chart. It doesn't, as I said, getting back to indicators, it doesn't invalidate it. It just gives you the chart gives you another geometry to that particular chart, and they both work equally as well. But as I said, on the faster time frames, 80 I think is a good look back period. Right. I looked at Euro Aussie because the Aussie was being bought. Let's have a look on the 15 here. Let's have a look what's happening. Yes, well it was, but it isn't anymore because it's all, this is on the 15, it's all stuck here. I think really the one to look at is probably something like the yen, because on the hour, yeah, I think the yen is definitely, and what we also want to see, as I said about this thing about, you know, things are looking at the faster time frames and seeing and going, perhaps we've talked about counter trend, but going also with the flow in the slower time frames. Well, the yen, certainly if they are all, if it's selling off strongly, the hour looks good for the yen pairs as well. And at the moment, as I said in my Facebook and in the VPA forum, that is, we've got a lot of divergence. There's all, you know, it's just the way the market is at the moment, and it's not going to get any easier between now and Christmas. We just go with the flow. So I'm going to pass over to David because I don't think my Euro is doing anything at the moment. So no, right. I think I'll. And there's no momentum there. It's very desultory. I can tell the Renko is based on the number of pips that go through, and when this isn't moving, you know, forget it. Just, you know, there's plenty else going on in the market.
Hi everybody, and a very warm welcome. Hopefully you can hear me. Hopefully you can see my screen. And can you hear me okay? Yeah, okay. Let's just move the chat box out of the way. Where to start? When you start early in the morning, it's really all about trying to get a sense of sentiment, flows, what's actually moving, what isn't moving. And certainly one of the places I always start is here. This is the 4 indices, the currency indices. Top left is the pound, top right is the yen, bottom left is the dollar, and bottom right is the euro. It just gives you, and this is on 5 minute, and obviously you could have multiples of these on various workspaces. This is on TradingView, by the way. And it just gives you a sense of where to go and look from a specific currency perspective. What is moving, what is sentiment, and how's it moving the markets at the moment, given that we are just 22 minutes past the London session opening. Very quickly, just where are we? Here we go. No, not there. Sorry, the other way. There we go. This is Radar Panel, which we developed for TradingView, and the reason I highlighted it is because when you're at these sort of points in the trading day, you're trying to get a flavor of, as I say, what is going on, and a radar panel. I'll show you radar screen in a minute on TradeStation. It's really trying to get a sense of the bullish, bearish sentiment, what's moving, what's going on in terms of volatility, etc., etc. So this is the panel we developed for TradingView, which is obviously included in the full package. And now I'm on TradeStation, which is just a different variant of that. And what I've got on this panel is I've got all 28 pairs up here and a very simple little yen matrix down here. And I guess this really makes the point, this yen complex at the bottom here, because they're all blue. It's only one time frame, it's in 3 minutes, and obviously you'd have multiples of these. You might have a workspace with several of these. But what it gives you is several things. First of all, it gives you an instant snapshot of, this is the trend monitor, and this is the trend dots. I haven't got the trend dots on the charts at the moment because I wanted to keep it fairly clean, but this is the trend monitor. So it gives you an instant sense of whether sentiment is positive or negative in terms of risk. In addition to that, as you can see up on the right-hand side here, I've got the volatility indicator set up as well within the panel, and you can do the same thing over on TradingView, and it just tells you where you've got volatility. And obviously with volatility comes congestion, comes reversals, comes all sorts of things. It's what you want to know. Now, if you have never traded through a crossover session before, this is a perfect example of how cautious you have to be coming up to the London Open. If you're trading longer term timeframes, fine. It's something that is just part and parcel of everyday trading. So if you're on the hourlies, dailies, whatever it may be, this is just part and parcel. It's just a pullback, reversal, whatever it may be. But if you're an intraday trader, you're a day trading, scalping trader in this market, then, boy, oh boy, you better be aware of it. I mean, it's absolutely bad. This is 8 o'clock our time. So in other words, the London Open, this is real time, UK time. We had a really nice rally on the New Zealand. I was watching it, and I just thought to myself, I wonder how many people are going to carry on trading that to long side, totally oblivious to the fact that we're coming up to a London session, the crossover session, and therefore the likelihood of either reversals, congestion, volatility is almost inevitable, etc., etc. And what do we get? Exactly that. And it is so predictable that it just amazes me that more and more forex traders are not aware of the dangers of trading through a crossover session from a scalping perspective. We had it on New Zealand, we had it on the dollar as well. This is over on the left-hand side. I've got a 4-minute CSI here. Here we are. This is what happened at 8 o'clock. So we had an immediate spike in the dollar, rushed up exactly at 8 o'clock. We had the euro, exactly the same thing. Whatever it was doing prior to that, it reversed immediately. Same on the New Zealand here, and to some extent the same on the Aussie here. The Aussie is starting to pick up again, because what we're seeing over here again is a general, if I click on one, let's move away from the, let's go to the Aussie. That's what's going on in terms of the Aussie at the moment. This is on multiple time frames now, 1 minute, 3 minute, 5 minute, and 10 minute. And this is another beauty of TradeStation, but you can also do it on NinjaTrader, obviously. And part of the reason we are working flat out on NinjaTrader right now is to develop a similar functionality in the market analyzer, so that you have the same ability to scroll through charts very quickly. These are all symbol linked. I haven't got them interval linked. So basically, we've got a 3-minute time frame here, but the symbol is actually linked over here to 1, 3, 5, and 10. So we can scroll through this very quickly. We can get a snapshot of what's going on, just enlarge the chart, see where we're going. You've got support, resistance. You've got resistance coming up here. This is on the accumulation distribution indicator. Trend monitor is blue, which is what we see from the panel. We have some volatility here. We've got a nice platform here. We've got very strong resistance coming up ahead at 83.50, so 10 pips higher up. We've got this. If we get through there, then we've got minor resistance from a price-based perspective. So have a quick look at the pound. You can see the pound rising here. The yen's still falling. So a quick look at the pound. Let's click on that one. Up comes the pound yen. What have we got? There we go. Let's go down to the 10-minute. Volatility is what we expect to see. But as Anna said, what we've also got right now is we have quite a strong divergence between what is going on in terms of risk. If I just drop that out of the way for a minute, that's the pound yen. This is on NinjaTrader now. Similar picture, obviously, as you would expect. Just go down on to have a look at risk. Here we are. We're on the futures now. We're on the E-minis. This is the YM. This is the Dow 30. This is the NQ, Nasdaq 100. And this is the ES, S&P 500. They're on the daily. This is on the 5-minute. But they're all pretty much the same. And what's interesting at the moment is this is over the last 3 days. This is obviously today's price action. This is yesterday, and this is Monday. What happened on Monday was something we've seen before. Very strong moves in terms of the yen pairs, which all rushed up. I think they all had volatility triggers on the daily. And the volume wasn't great either because it was a holiday. And you see this a lot. When you get holidays, it is a great opportunity for the market makers to actually move the markets around without any great difficulty because there is a lack of participation. And it was certainly at strong divergence as to what was happening in terms of risk. These markets are fragile. You've got the VPOC here. We've said it time and time again. You know, this is not a strongly bullish market right now. We're in as Anna said, we're in a phase of longer term congestion. It is pretty weak, and it's weak across all three. This is on the NQ. There we go. That's on the daily. Similar sort of picture. But what's been happening in terms of, let's just go on to the yen pairs. Back to, there we are. There we go. This is what we've seen in terms of certainly reflected on the pound. Reload that, get that on there. Certainly in terms of the pound, this is what we've seen. Very strong moves. It's continuing. It's still very bullish. Now that is a real divergence against what is going on in terms of equity markets, which are actually, they're not falling out of bed, but they're certainly not showing any signs of the strength of bullish momentum that this chart would tend to suggest. And even more so, if I click this over to Aussie Yen, just pop that up onto Aussie Yen. I've got a lot of data coming in here. This is the Aussie Yen chart on the daily time frame. Rush up here, more positive moves yesterday, although muted and higher volume than Monday. But then, as I say, Monday was a holiday, so you know it's a warning flag that yeah, fine, okay, it is bullish. You know, we've had this strong run up. We've got some decent long-term positions in here, but you know, it is just be cautious because those are the periods at which you will find the market makers laying traps, tricks, all the rest of it. And always bear in mind what is going on in terms of the bond market and what is going on in terms of equities and also in terms of the other risk currencies as well. This is on 10-minute, I think. Yeah, 10-minute. This is the yen, which is falling nicely. And that's reflected over on Trading View. Let's just go and have a quick look, see what's going on. Yep. So on our indices over on the right-hand side, I won't bother pulling it over again. We've got the pound rising nicely on the index on 5. We've got the yen falling nicely as well. So if we just go back onto the pound yen again, put that back on there. There we go. That's that move we've got. Is there anything to be concerned about in terms of what's going on? Let's just fill that up. Let's try that one. It's quicker probably. There we go. we've got the trend monitor, we've got 15-second, 1 minute, 3 minute, 5 minute, 10 minute, and the daily chart. And this is what we're seeing. We've got the trend monitor, which is blue throughout, which is great. Let's just see what we can see. Let's just go down to the 10 minutes, slightly slower. There we go. We had the volatility at 8 o'clock. Lots of volume coming in. It's what we expect to see. You know, it's just part and parcel. We've had a decent rush up on that candle. Good volume under it. That's fine. No wicks to the body either. Market reversed a little bit down here, buying back in again. So we've got buying coming in here as well. So we're supportive. We're coming up to the volume point of control. So just be aware that, you know, at the top of this, we've got a low volume node, but we may see some congestion building in the short term. But generally what we're seeing there is buying of pound, selling of yen. Just go back onto, here we are. Just see if that's reflected across the others very quickly. New Zealand yen, not so much. Let's have a look at Aussie. Aussie is climbing with the pound. So that's not too bad, but still not as strong as the pound. Let's have a look at the CAD yen. That looks pretty good. There we go. So that's not too bad either. Pulling away, pulling away. And it's really a case of moving up and down, you know, trying to pick off the trades. If you're an intraday day trading scalper, this is what you're after. Let's have a quick look, see if we can find something else. Let's have a look at, no, not really. Let's have a look at the Aussie dollar. And, you know, it's moving sideways. It's no surprise, you know, the dollar's, you know, edging down again. It's had a little bit of a move higher. I'm just looking over on TradingView again, it's edging down. And it probably is, basically the pound is probably the one to stick with. Let's have a look at pound Swiss, see if that's doing anything. Not a great deal. So probably of those, the pound yen is the one to stick with for the time being. It's still looking okay on the faster time frames. Still moving up to 66. And we've still got a little way to go. So if we go on to the multiple CSIs, I've actually got them here. There we go. This is on 1, this is on 4, this is on 5, and that's on 15. So quite a wide spread. This is the pound that's rising. This is the pound that's rising, the yellow line, rising nicely, rising nicely. Down onto the 5 minute. And what are we seeing? We've got the CAD here, the Canadian, that's rising. So we've got rising Canadian, we've got rising pound. The Aussie is starting to kick back up again. New Zealand that's the reaction at 8 o'clock, starting to find its mojo again. But really the currency that's driving at the moment is the yen, which is falling nicely. So it's a question of looking at the complex, deciding which one's going to suit you best. And if we go down to the 15, you know, we've got some way to go before we get back up into overbought, some way to go before we get back up into oversold. And that is really what it's about. It's a question of teasing out, you know, which ones are going to deliver. Let's have a quick look at the dollar yen. It's probably not going to go anywhere because we've got dollar and yen moving in the same direction. We've got the green one, which is Swiss franc, that's moving the same direction as the yen. We've got euro moving the same direction yen. So when you've got the actual currencies moving in the same direction, then if you look at those charts, there isn't going to be any great there's no divergence, there's no strength of momentum there because they are moving in the same direction. There may be minor trends developing, but you're not going to see the same strength as you would see with the pound or the Canadian against these counter currencies, because there has to be divergence. The analogy I've used many, many times is of a train leaving the station. Just pop that up. There we go. Just get a better look at it. Is of a train leaving the station. And two trains leaving the station together, they may be traveling at slightly different speeds. So there may be a differential speed between the two of them, but there isn't going to be the same momentum that you would see where you have two trains traveling in opposite directions. In other words, traveling towards one another or away from one another. And that is what you're looking for the whole time. You are looking for divergence, you're looking for strength, you're looking for the level of inclination. The fact that these lines are rising sharply or falling sharply tells you there is strength in the move. There is momentum in that particular move, and therefore you are likely to see a much, much stronger trend than you would ever see where you've got these moving together. So, you know, pound CAD, pound Aussie, whatever, you know, they are not going to be moving very strongly. Let's go back to Ninja Trader. Just drop that out the way. There we go. It's still going up nicely. Let's have a look at the volume. All looks pretty much okay. Yep, that's fine. Let's just head over onto the, let's go and have a quick look at the, I've got, where are we? Currency majors matrix, there we go. And again, it's about trying to tease out the best trade. This is a very simple matrix of the majors. This is on spot. So I've got pound dollar, dollar CAD, Aussie dollar, euro dollar, dollar Swiss, and New Zealand dollar. And again, it just gives you a flavor of whether the majors matrix, whether the majors pairs are all moving together, because ideally what you want to see pound dollar rising. You want to see, because that is selling of the dollar, you want to see dollar CAD falling because that's selling of the dollar, Aussie dollar rising, euro dollar rising, dollar Swiss falling, and New Zealand dollar rising. And when you actually look at them, I'm not saying there's divergence, but there certainly isn't the equivalence of strength that you're seeing in some, for example, in cable, where you are seeing some decent moves because you're seeing strong buying of the pound. Whereas if you go to euro dollar, you're not seeing anything particularly strong. And as I said earlier, the reason is because the euro is falling with the dollar. So hence you've got this congestion phase. Now, at some point, and this is a nice example of patience and levels and what you're waiting for, at some point, this will develop a trend. We had a trend over here, middle of the night, but now we're in congestion. We've got the volume point of control. We have this very strong level on the accumulation distribution indicator in terms of price-based support, price-based resistance rather, very strong level. It was literally being tested as I'm talking to you. But at some point, this market will break away from this region on 5 minute and develop a trend in the faster or slightly slower timeframes. So what you're looking for is, if you're a breakaway trader, all you require is patience. It's just a question of waiting for that market to come to you, that opportunity to come. And what you'd be looking in the context here of is, first of all, a move beyond here, close above this, which looks as though it may well happen in the short term. Then you're looking for a move through here. This is low volume. The volume here falls away dramatically on the 5 minute time frame. So in terms of a move to the upside, yes, this looks like a viable possibility, but obviously be looking at it in the context of of other timeframes as well, not just in one. I just happened to pull this one up because it's on the complex. But what this is also telling you is that the selling of the dollar, which is now quite dramatic over on, let's pull this over, save talking to a blank screen. There we go. This is what we're seeing now. This is what we're starting to see. This selling of the dollar, which is now quite strong. This is the pound, which continues to give us a nice trade on the pound yen. And this is the yen over here. So the question now is, well, you know, trading the pound, is it better we're trading the pound yen, which is these two, or is it better we're trading pound dollar, which is these two? And at the moment, it's pound dollar, because pound dollar is probably going to be moving quicker than pound yen, because the yen has come to a little bit of a pause point. Now, that's not to say the pound yen move itself won't have come to a pause, because it still has pound strength in there. It still has this driving in there. But if the yen is going to flatten off a bit, then, you know, cable is probably going to be moving faster than the pound yen. And just to round off on the point about using a matrix like this, what you're seeing is, what you want to see is all of them now moving at pretty much the same velocity, the same speed. And that, broadly speaking, is what you're starting to see, because you're starting to see the euro start to kick up. You're starting to see the Swiss franc here move. You're starting to see that against the context of this strong sell in the dollar. And that's really all it is. It's just a question of teasing out and picking off the opportunities, trying to understand, where are we? Currency pairs multiple times. There we are. And this is the point. Going back to the pound yen, you know, the pound yen move, this is on 15-second, I appreciate that. You know, we've got a volatility trap, we've got a lot of volume coming in here, and, you know, it's a classic sign that we expect congestion. Might not be a reversal, but at the very least, we're going to expect some congestion. I use the 15-second chart a lot because we've been doing this for years. I can do it very fast. I like trading a much faster time frame. But in addition to that, it also tells you what's coming up at you in terms of downstream of where you are on a 1 minute, 2 minute, 3 minute, 5 minute, whatever it may be. So we see the volatility come in, we expect some congestion to follow. It's what we've got. It was associated with good volume, so we know it's genuine, and it's created a pause point which we're seeing over on the 1 minute, 2 minute, and 3 minute, and so on and so forth. And that little pause point is reflected in that little wick there on the 3 minute. So it just tells you what's going on. But the move is still going, it's still valid, pound is still rising nicely, yen's still falling, the dollar's come to a little bit of a pause point, but it's still falling. This is on 10 minutes, so this is a much lower time frame. So there we go. Can I pass back to you, darling? Okay, let me pass back to Anna at that point, if I may.
As we mentioned, the pound yen, this is what it's doing at the moment. You've probably got it on your screens as well. I've got the 15-minute hit. Just go back to the hour. Let's have a look. Right, it's still the strongest of the yen pairs on the hour. But as I said earlier, when I said obviously, the pound looks as though it was going to be turning over. Now it's beginning to flick up on the hour, which is what we want to see. The yen is still moving lower. The nice thing about we've got here is this indicator is when you get a cross, which is actually really, really nice signal, because yes, some of the trend has happened, but crosses can also be potential trading opportunities. But let's just go down to the, as I said, the 15-minute, and we can see the strength. This is what we want to see with these lines. We want to see nice, strong, vertical, sharp angles on the currencies. This is obviously, see the pound, the yen is still falling nicely. That's telling us that there is strong selling in the yen, and then it's a question of where is that best represented, where is that the strongest, as it were. And it seems to be a sort of race at the moment between the Aussie and the pound. And what's interesting is the pound is, that's ahead at the moment. Maybe going to have a look at what the Aussie yen is doing, particularly if one pair is coming to a significant resistance point, and if you're looking at it this for the first time, as it were. And talking about support and resistance, let's have a look here. Where are we? What I mentioned earlier about once you get through these key third levels, there was only a sort of minor pause, and off it's gone through. If we look on the time charts, where do we have here? And so 6:45. Not a lot. In fact, this escaped a lot of the volatility for the London Open. But what the Renko does is it smooths out, as I said, the price action, and just not only helps with an entry, but also with keeping you in, which is actually the most, it is the most difficult aspect of trading. And then you use the levels for particular targets. Where is this going? We don't use risk and reward as it's because we allow the chart to tell us where the price action is likely to pause, as it were, and where is it aiming for. And if you give yourself a fixed ratio, there's arguments for both sides but in our opinion, if it was all about fixed ratios, why do traders struggle so much if it was that straightforward? But that doesn't mean you can't have any idea of the potential in the trade. I think the best way I can describe our approach is we look at the potential, and that potential is determined by the price action, the volume, and, as I said, most important of all, the support and resistance. And if we look at the hourly, as I said, the levels are here for the rest of the week. the R3 is down here. This is the volume point of control. We're looking at a break from the volume point of control. We're coming to the top of the volume resistance on this particular time frame. So that will cause a pause that we are seeing. So even if you don't see a support and resistance level on the faster time frames, always go to the slower time frames, because that will take that is stronger. So that will influence what you're seeing. You know, if it suddenly comes to, as you see here, you think, well, hold on, it's just sort of stopped. I don't really see anything of great significance on this one. But it's when you move to a slower time frame, you think, yeah, it's already come off this level here. It's actually it is a volume resistance level. So it is going to struggle, and to get through, it's going to need a lot of volume. Does that mean it's going to reverse? No, it's simply that it's just reached this pause point. And on the daily chart, moving out even further, it's also coming to a level where, if we look here, that was yesterday, that's the spike where it actually pulled back from. And if we never look over to the left often enough, we can actually see that it is also a level that it came off. I mean, it goes back some way, but the levels on the slower time frames, they still have an impact of what is happening at the live edge of the market. You say, well, that's going back to June. Yes, but it did come off there. So at the very least, you are going to expect a pause. The pound is still rising. The yen is still falling, but it's actually pausing on the charts itself. So what's happening? Well, you know, what do we see on the 15-minute on the matrix? We see this change in position. We know why the pound yen has come to this pause point, and in fact it's been the baton, if you like, has been taken up by both the Aussie and New Zealand, with the Aussie slightly ahead of it. Is almost like a race, as it were. You know, there's a horse race where one horse is in the front at one point, and it falls back, and it's taken the lead is taken by another. Where's my Aussie yen? Oh, there we are. And let's see where that is. But it's support and resistance all the time, which will help to determine whether not only pause points, also potential reversals, and also springboards, if you like. And when you get, as you see here, you get the volume point of control and you get a key level, then that can act as a very, very strong springboard, as it were. And the actual entries, certainly on the faster time frames, and for if you're intraday trader, this is where using the Renko will help, because we've developed the Renko charts you will find on platforms, but the way we use them on certainly MT45, we've had to develop it, and on MT4 you can add our proprietary indicators on, and you can add standard indicators, you can add moving averages, you can add what you like on here. It just, as I said, it smooths everything out, and you can then take it with your decision making. It can be made easier, if you like, by looking at the trend dot and the trend monitor. This is obviously we had the move lower, very with the number of pullbacks in this trend lower. You can see, if you look at this move on the time chart, you will see a lot of pullbacks, corrections that are reflected in the Renko, but the trend monitor stays relentlessly red. And the kind of rule of thumb, it's not a rule set in stone, it's a rule of thumb, and that is that when you get a consistency, maybe 3-4 dots on the trend dot with this bright blue of the trend monitor, then, and also where it is in terms of support and resistance, then it is an opportunity. I'm not saying that's it, you go in, it is an opportunity. What's interesting here is you had the move lower back, did go through the S3, didn't manage to, there was no follow through back into the congestion. This is with trends what you have a trend, you have pullbacks, then you have a congestion phase, and then the market decides whether it's going to resume the original primary trend or that you're going to get a reversal. You do get V-shaped reversals, but reversals tend to come off congestion phases, and when they are at these key levels, and then you have the change of colors, as I said, with the trend dot and the trend monitor, you're here. That's great. It's a great entry. What it also does with the Renko, it helps to keep you in. That is so important. And when it looks, let's go to the 15-minute. Here, you've got this wonderful divergence. You had a cross here at this point, probably coming off the S3 here. Then you look at your levels. Well, where are you aiming for this particular move? On the daily levels, we've actually gone through most of the levels. Well, the obvious next stopping point, we've got a price base, and we've got the R6, but we've got these highs here that we have, which is a volume resistance. But if you're down, if you're only looking for a few pips, that will be maybe enough for you. Looking at the 5-minute chart here, we've come to a little bit of a pause point again, volume resistance coming into play, but we've got some nice, we've got a lot, nice buying coming in. There's that little squishy candle there with a lot of volume underneath it. There's an anomaly. If that was going to be a lot of selling, you would have expected that candle to be much deeper. It isn't. It's going to take a little bit of an effort to go through, but generally speaking, it's still looking as if it wants to move higher. And then you use the intermediate levels for potential targets, along with what is going on the slower timeframes. Tend to use the Renko certainly for entries, potential entries, holding in, but looking at the time charts and the slower time frames to see whether for exits, basically. You can use this. You simply wait until you get the reversal, but I tend to find that if you want to come out more quickly, then use the time charts. You think, no, that's it. It's entirely up to you. It's a discretionary thing. There are no hard and fast rules in in our approach. It's putting together all these disparate bits of information and trading accordingly. Now these pairs, the yen pairs, they do reflect in the main what is happening with on the indices. So you do need to keep a watch of what is happening because, as I said, sometimes the forex, it does actually lead the way. Where are we? Yes, and in fact the Dow has suddenly ticked higher. Let's have a look what's happening on the Russell. The Russell's going higher as well, and they're surprised. The Nasdaq is going higher as well. So I think I can safely say I think we were right about that one. So you saw the sentiment change in the forex market, and you look over at the indices. Oh, well, the indices aren't doing anything at the moment. It's a little bit, I know we've had this, this slight contradiction of what's going on, but more often than not, we have found that the forex market will lead the way. What you'll notice, what the Renko will also tell you is, you can tell with the Renko, this is going through at 2.5 pips. Each time 2.5 pips goes through the market, one of these little bricks is completed. But it's quite desultory. Can you see? It's very slow, and that tells us that the momentum is draining away slightly. You do get a lot of buzziness at the beginning of the London session. What is it now? 9 o'clock. Just have to wait. It will pick up. But if you feel I really don't want to sit through this because it makes me nervous, then just come out. If you are a short-term trader, you're a scalper, you're only looking for a few pips at a time, you don't want to sit through this. You can see that that I'm only talking 2.5 pips, and it can't seem to get through 2.5 pips. Nothing is sort of happening at the moment. So the decision is pretty much it's yours. It's yours to take and yours to decide. Right, very quickly, I'm going to pass back to David. Before I do, I just have to find my, where are we? No, just bear with me a second. Nope. David said he lost my audio, but I told myself, right, that was the disclaimer. Very quickly, we talked about the volume price analysis methodology. If you don't know already, it's all explained in the books that you can find on Amazon. This is, we've put together the ones that are Forex specific into what we call the this box set, and VPA specifically for Forex, the general VPA, and the three-dimensional approach, which explains the relationship between the fundamentals and the related markets. And also there's a book of examples. As I said, this is a little schematic which explains VPA in more detail, the indicators, and more importantly, the complete Forex trading program, which you can find at quantumtradingeducation.com. It covers all really covers everything we know you need to know to become a complete Forex trader. Psychology, fundamental, relational, technical, and what we call the mechanics of trading. And I'm going to pass over to David, and he can explain a little bit more about the funded program as well. And you can follow me on Twitter. This is my tweet deck. As you can see, they're all going through. A lot of stock. I do a lot of stock analysis on here and commodity analysis from my site, which goes through this particular feed. I am actually going to start a completely separate Twitter and blog, and I have another site called, is it called Forex Station, David? Yeah. It's Forex Station. It's kind of, well, it's not, it's very much a station at the moment. It's not really done very much, where I'm just going to focus primarily on Forex. I don't know why as I said, my Twitter feed has kind of, my general one has morphed into more for stocks. My followers tend to be more stocks, a lot of options and commodities, and I really feel, you know, it's horses for courses, really. So that's what I'm going to do, and we will send out the details of that in the coming weeks. And it's really nice to interact with lots of different traders. But as I said, as we always say, this particular methodology you can apply to all markets and in all timeframes. So thank you so much for coming along today. It's been great to have you here. Let me just pass you back to David. We are back later, where it will be more general indices, commodities, and particularly stocks. So if you're coming along later, great to we'll look forward to seeing you, in inverted commas, then, although we are thinking of putting ourselves on camera, and maybe we'll get you, everyone else, to be on camera as well, which will be great fun. But if you're not coming along, then we'll catch you next time.
Hi everybody, welcome back. Very quickly, still on TradeStation and pound yen, and you can see here the pound started to, we got up into overbought, yen down into oversold, now starting to reverse a little bit, and you're seeing it over here on the faster time frames. So, you know, like all good things, comes to an end, but you know, if you made some money on that, terrific. And it's just a question of depending which time frame you're on, closing out or sitting tight, waiting for the trend to develop longer term. Very quickly, Anna mentioned the education site, Quantum Trading Education. This is the funded Forex program. It's been hugely popular. We have a lot of students on it. And the reason we introduced it was very simple. It is only available to students of the Forex program. It's not publicly available. Basically, you are trading our money. And the reason we put it in place was to allow our students, to give our students the opportunity to actually trade large sums of money, but with no risk. The only risk is your cost of entry. You decide on which level you start at. You either start at $5,000, $10,000, or $15,000. We call it an evaluation account because that's precisely what it is. You are evaluating yourself, and we are also evaluating you, because what you want to see at this level is consistency. It's a very simple percentage profit target we lay out. You have 12 months to complete, so you've got plenty of time. And it's a question of achieving that very simple dollar amount in terms of profit. Yes, of course, there are risk principles, risk and money management rules applied to the accounts, but the actual maximum risk to you is the cost of entry, which is either $425, $850, or $1275, depending on which level you want to start at. Once you're on the program, that's it. You can't lose any more. It's our money. If you start off at the $15,000 account, then once you achieve that very simple profit target, and this is only trading the 28 spot forex pairs, but once you've achieved that profit target and you move on to what we call the portfolio manager level up here, you then get to trade the indices, UK, US indices, and also gold as well. And what we then do is we multiply that amount, your starting capital, by 4. So if you start with 15,000, then you go up to 60,000 is your next account to deal with, and thereafter we double it. So it goes 61, 22, 44, 80, right the way up to 2 million. You're earning all the time. At the evaluation stage, you get 35% kickback in a one lump profit repayment. On the portfolio manager levels, you get paid at 50%, and you can draw that off monthly or not. You can leave it in the account, you can let it build up, do what you want with it. And finally, up to the $1 million and $2 million accounts, there you are earning at the rate of 60% kickback. So it becomes extremely profitable at that point in terms of the actual money flow that's coming out, because you're dealing with very large accounts. But as I say, this was put in place, we put it in place last year, pretty much around this time, I think last year, September, October time, to really give our students the opportunity to leverage their knowledge, to put their knowledge into practice, and to give them the opportunity of trading large accounts with no risk and keeping your trading capital safe, and you can use that to trade your own account in parallel with our risk accounts. So that's why we did it. It's all part and parcel of the program, but as I say, it's only available to students. This is where you'll find all the indicators: quantumtrading.com, MT45, NinjaTrader 7.8, TradingView, and TradeStation. As I said earlier, we are working on NinjaTrader. We're working on Market Analyzer first of all, so you actually have a very similar scanning option in terms of the indicators and also scanning the various markets. So that's coming along. We're working on NinjaTrader for the next few months. We've got various updates to make. We'll have new indicators coming through. So if you have the full package on NinjaTrader already, you'll get all those free of charge. It's what we always do with every single platform. If you buy one indicator from us, we always give you a credit in the future if you're upgrading. If you want to buy something else at a higher price, we give you a credit, whether that's another indicator, a bunch of indicators, or upgrading to the education program. So if you've got some indicators and you want to upgrade the education program, we make it happen for you, because all the indicators are included in the quantum trading education program as well. So if you've bought some, we give you a full credit for it. It's as simple as that. Finally, to Anna's site, annacooling.com. This is where you'll find the analysis, which appears down here, all the latest posts on various things. The books are up here on Amazon. They're either in Kindle or in paperback. I have to say, we have just been so humbled by the comments over the years. The number of traders. Anna's Twitter feed is just ridiculously busy with wonderful, fulsome comments about the books. It's just... And they're all doing, all those traders who are following in these various huge groups around the globe now, they are all doing really well following this methodology. So we're just enormously grateful and very humbled by it. These are all the links to all the various sites as well, and you've got all the box sets down here too. They are also available on Amazon. So that's it. Thank you very much indeed for coming along today. Hope you've enjoyed it. We will see you again soon. We'll see you later. 3 o'clock, I think it is this afternoon, or maybe 2:45, but you'll have it on the feed if you see it there, if you're subscribed anyway. So thanks very much indeed. See you soon, and bye for now.